Welcome to the Scale Up Valley podcast, where we bring the best founders and investors to help you scale a business from 1 million to 1 trillion. Today's guest is a very special one. Her name is Trish Higgins, the partner at Chenmark. Trish, welcome to the show.
Thank you. Excited to be here.
And let us know a little bit more about your story, Trish, to start.
Sure. So I guess most importantly, I'm Canadian, even though I live in the US now. I like to make sure that's laying the groundwork. But I started Chenmark in 2015 with my husband and brother-in-law as a family. And we all had a more traditional finance background before we started. So, but not really in private equity or investment banking or anything to do with analyzing companies. Right. We were more on the market space and doing analysis for investments and stuff like that. So we sort of collectively all, when we were, I guess, in our mid-20s, just sort of felt like we wanted to do something a little bit different. And we felt like we wanted to take a lot of the skills that we learned sort of in finance and see if we could apply them in sort of real operating businesses and out in the world. So we had an idea of, sort of, can we potentially buy a small business just sort of on the side of our current jobs and just as something a little bit different. Right. And as we sort of dug more into that and as an idea, we became sort of more enthusiastic about it. And, that led to officially starting Chenmark. So
that's an amazing story, and we will go deeper. But yeah, the first question, that's why small business acquisitions, right?
Yeah, so it's interesting. I think we kind of heard about it first through a couple of different lenses. My brother-in-law Palmer had actually sort of been working with a small business, and he saw some things that were a little bit inefficient and had, kind of had some more hands-on, experience of saying, hey, some of these small businesses could really be run, a little bit, a little bit more efficiently. And then we also, kind of, it was right at the time when interest rates went like right to zero. And everybody was trying to figure out kind of like, well, how do you exist in a zero interest rate world? And I remember my husband and I both read the same newsletter, and it was talking about how things like car washes and laundromats and, sort of boring old businesses would be sort of increasingly attractive because they had really good yields. So there was sort of a lot of different things that kind of sparked our interest. So we started thinking, how do you buy a small business, and what's that all about? And we were fortunate that I went to business school, and there were some sort of classes on sort of more traditional kind of what's called search funds or entrepreneurship through acquisition, about sort of buying smaller businesses. And I didn't take any of those classes when I was there, but I did have friends who had taken them and sort of was able to connect back into a community. And, the more that we sort of dug into it, we said, hey, there's a big opportunity in terms of, in the US and Canada, at least, and I think in a lot of other countries as well, the business owners have aging demographics. There's a ton of small businesses that are sort of at a size where they're they're too small for traditional private equity to care about. But they're real businesses, and they've been around for a long time, and they're sort of too big to sell to your cousin, and so they didn't necessarily have a ton of opportunities for exit, but they were perfectly good businesses. And so we said, hey, we think that there's sort of an opportunity here in a market that's quite large, very fragmented, very, very inefficient, for us to potentially, buy additional, sort of get involved in the space and build a portfolio of cash flowing businesses. So that's sort of how it kind of came to be. And I think on a personal level, we just like the idea of working with sort of existing small businesses and helping facilitate an owner looking to retire, and just sort of thought that would be sort of personally fulfilling as well. So it was sort of twofold. One was the market opportunity to build something that we think is, we thought and still think, is an attractive one, as well as the fact that it sounded like a fun thing to do.
Right. So we know that nowadays entrepreneurship through acquisition is becoming more and more popular. But if we go back to, you started in 2013, but then you became full-time in 2015, right, Trish? And
yeah.
By the way, it seems according to your LinkedIn, almost congratulations, you are turning 10 with Chenmark, right?
Yeah, almost. Time flies. But it was really sort of 2013, 2014 was the idea sort of percolated. It was mid 2014 where we said, we're going to do this. And it was 2015 when we bought our first company. So it wasn't one of these things where, we started off with having some sort of big presentation on, the market opportunity and what we're going to do and how we're going to be amazing. It really started off more incrementally as sort of a little bit of an idea, and we kind of dug a bit more and it built upon itself. And so at first, even though we said, let's buy a small business, it was, let's buy one that's, close to where we're currently living. We were in Connecticut at the time. So let's buy something close to Connecticut. Maybe one of us will quit our jobs and focus on running it. And then, as we sort of were looking more and more, we started looking more broadly. We started looking at different types of businesses, and eventually it was, all three of us are going to do this. And so it was a very incremental in our approach to starting it.
So today you are based in Portland, Maine. So which means that you moved to the West Coast with the first acquisition, or it was because of other personal reasons?
Well, Portland, Maine is still on the East Coast. So we're there's two Portlands. No worries.
European issue.
Yeah. All good.
Sorry about that.
It's happened a lot. So we moved up. We're about 2 hours
when we were
Boston.
Trying to figure this out, I was always putting you the time in Pacific time.
That's funny.
Good morning. Now I thought that you were just having your first slot in the morning.
I'm midday. It actually, this is a common problem, especially since we are the much smaller Portland. So our first business was based up here, and so once it seemed likely that was going to happen, we moved up here, and it was the deal wasn't signed. It could have still fallen through, but we sort of said, at the time, especially, this area had much lower cost of living, and it seemed like a good place to sort of set up. If that original deal fell through, maybe we could just do a search from here, because there was nothing really tying us to Connecticut. It was just a job. So we moved up there, and just haven't moved since.
Right. And I was just making the point, kind of going back 10 years or 8 years with your first acquisition, that at the time tech was exploding, right? So nowadays especially people coming from tech, are getting more and more interested. As you know, Scale Up Valley has been recording 300 plus episodes on how to scale a tech business. And we are covering new ways of entrepreneurship. We just had Robert Graham from SIG and Pillar Elf Group on the show. So the listeners have some education now about the traditional model, the self-funded model, and we know that the Chenmark's model is a little bit different. And I found it super interesting. And we've been also being able to share your story and speak in multiple podcasts, and you do it in a very excellent way with an excellent newsletter as well. I fully strongly recommend it.
Thank you.
But that's why I was insisting on the follow-up. So do you guys felt at the time that it was too much noise in tech, or it was just your personal interest? You wanted to kind of play a more contrarian approach, being loyal to your inner voice, let's say, just trying to understand your mindset at the time to say, well, let's buy a business. And of course, you explained some of the reasons why. But at that time, sometimes we think, okay, let's go with the crowd. If everyone is going with tech, why not go with tech? Right?
Yeah, I think a couple things. First of all, the sort of go-go world of Silicon Valley and fundraising and all this stuff just never resonated with us. Clearly a lot of people have done very, very well, doing that. So that's not to say that I think poorly of it. It's just there's something about it that just has never really made sense to us, and we couldn't get our heads around. So it could sort of hard to want to do that. I also know a lot of people who went to work in sort of startup in Silicon Valley, and like they're incredibly smart, hardworking people who are like hyper competitive. And I wouldn't necessarily pick to compete with those people if I wanted to start something new. And then finally, we kind of came at this from more of a markets perspective where cash flow is king.
Right.
And so we were always, if we thought, okay, I remember one of my first bosses explained to me there's two ways that the value of a company can go up. It can either grow its earnings or it can grow its multiple. So those are the two ways. And he said, a company can usually, it has control over its earnings, right? So like the company can do stuff in their day-to-day strategic decisions and operations and all those sorts of things that can have an impact on earnings, right? But the company usually has no control over multiples. And so a company could make $1 and the world could view that as worth $1, $4, or $1 million for, and I remember that kind of like explanation always sticking with me and feeling like if we ever wanted to do something, it felt easier to focus on something where we didn't have to really rely on what the market thought of our business, but we could just rely a little bit more on like how we are operating. And if we could buy cash flowing companies and have them continue to generate cash and use that cash to buy other companies, which is sort of a key component of our business, then we thought that would be a pretty cool thing to own over the long term, kind of regardless of market cycles. And so that was always interesting to us. I think we're students of history and sort of love learning about all the different cycles and how people have made money, how people have lost money, and all that sort of stuff. And for whatever reason, that sort of focus on cash flow was sort of ahead of growth, I'd say.
Right.
Always just made more sense to us, and just I think fit more with our personalities.
Right. I love the idea behind kind of the typical thesis of acquisition entrepreneurship, which is completely opposite to Silicon Valley, that you need to reinvent the wheel and to create a business model and to surf the new trend and pray to be on the right timing there. This is kind of, we are looking for a business that doesn't need us, right? So it will be successful with or without us. And of course, we can influence and accelerate a bit the success and make it even more successful. But it's kind of a business that will have success even if we are great leaders, or if we are not so great leaders, it will have almost the same result. Of course, I'm oversimplifying with this statement, but I think we get.
I would argue that the operator makes a pretty big difference in the small business world, but it is, I'd say we think about it in terms of the durability of demand. So like if you look at our businesses, that's the first thing we dig into is, okay, we have some landscaping businesses. Like, do we think people are still going to want landscaping? Are people going to mow their lawns themselves? Probably not. it for certain types of people or companies or whatever. And so are they going to want their yards to look beautiful? Probably. And so we think about it as, okay, like, is this demand going to be here? And then, like, how do you build a company around that, sort of the ability to service that demand? So when I talk to, it's happened a little bit less lately with sort of changes in market dynamics, but for a while I sort of explained Chenmark as, if you think about sort of stereotypical Silicon Valley startup stuff, and you just do the exact opposite, like, that is what we are doing. That is, to me, the best way to explain our approach. Low multiples, not a lot of very modest organic growth opportunities, slow incremental approach to building the business, focus on free cash flow, just all those things is pretty much what we do.
Kind of growing 10 to 20% is more than enough, right? And
that would be a lot for us.
Lot, right?
That would be a lot, yeah.
So you would say kind of 5 to 10 would be the ideal, or even just increasing profits and free cash flow and kind of plateauing in terms of revenue?
Yeah, when we model it out, we usually just, the deal has to make sense to us if the company basically just stays steady where it is and has like GDP level growth. So that's not even 5%. That's like 3%, So that's usually our base case assumptions. Even if the company has been growing a lot in the past, for us to do a deal, it has to kind of make sense if it just kind of continues to kind of do what it's doing and experience some incremental growth. And even margins might compress a little bit, but kind of it stays steady. Now, that's underwriting, that's not reality. And so in reality, some of our companies have grown a lot faster than that because they've had opportunities to capitalize on it. But when we think to, hey, like, what does success look like for us? Right. Success does not have to include high levels of growth. As long as things kind of keep chugging along, then that is still a very good outcome for us from a financial perspective.
So it's really about predictability, stability, sustainability, being able to have long-term success instead of short-term success, and maybe it might die in 2 or 3 years, right? So because you are also not leading it in a way of trying to exit the business, you want to have more and more companies coming to your portfolio, right? And being able...
And that kind of goes, the very key component of our strategy is we're looking to be long-term owners. And so we don't spend any time thinking about selling our businesses. And so and you make, I think, different decisions if you're saying, hey, I'm going to have to live with these decisions 10 years from now. So if if my company does really well next year, but I've gutted a bunch of whatever product development or customer relationships or, and that's going to come back to bite me in 2 or 3 years, then I'm not going to do that. And I'd prefer to have sort of steady growth, or even sometimes a declining performance because we're doing the right things, so that we can have a better business for the long term. And I think that we're very lucky because we don't have external investors who want us, who are looking to realize a gain on their investment through an exit. And so we don't have any of those external pressures that take away from just focusing on trying to every day run our businesses as well as we can for the long term. And that's really all we're trying to do.
Right. So in 2013, 2014, we've been kind of searching, reflecting, maturing the idea. 2015, you make the first acquisition. Where are you today, Trish?
It's been a busy 8-ish years later. So we now have 10 sort of what we call platform companies. We've done, I don't know, we don't keep track, but 30 to 40 acquisitions total, probably because some of our companies do a lot of acquisitions themselves. And that's how they've grown. So we've had a lot more experience doing deals than we did when we started, when we had zero experience. So we've seen, I will say that in our world, at least, every deal is different. We've learned that there's always something that happens.
Right.
So we've certainly have had a lot of experience there, and 10 different businesses all being run by different CEOs in different geographies. So we have 2 businesses in Western Canada, and one down in Florida, and one in Tennessee, and New York, and Massachusetts, New Hampshire. So we're kind of all over the place geographically. And we have a wide sort of smattering of different industries that we're in. So I mentioned landscaping. We have some tourism businesses, food manufacturing. We're in the paint business. Sort of all sorts of different industries, and the common
cleaning as well. Just trying to cover HVAC, covering the traditional
cleaning.
sectors.
We look at it, but the core theme is all owners who are looking to retire.
Yeah.
All businesses that have been around for a long time with a history of, strong cash flow, and businesses that we feel, will continue to be around for a long time. Of course, there are technological advances in every industry, no matter where you are. And so our kind of goal is always, hey, there will probably still always be demand for landscaping, and how do we just make sure that our companies are positioned to take advantage of whatever sort of advancements come our way. So that's pretty much it. So the company has certainly evolved a lot, and as sort of I mentioned, I think briefly earlier, is a key component of our model is to use the cash flows that are generated by the businesses to fund the equity checks for the next business. And so we sort of, when we think about the growth of Chenmark, or the model, I mean, in our heads, kind of, it always goes to sort of the traditional graph of like compound interest, where, the amount of cash you get from one company is so much, but then you scrape it together to get 2, and then that's better than 1, and 3 is better than 2, and sort of it builds over time. And so I think we still very much feel like we're in maybe like the second inning, or like we still feel like we're very early on in what we're trying to do with Chenmark. But it's cool to see it start to actually work, which it feels like it has in the past couple of years.
And kind of going back and thinking about the expectations that you had at the time, from an external point of view, it seems a lot what you guys were able to do, right? So 10 platform companies, 30 to 40 acquisitions, and being able just to fund that growth with the cash flow of the
and 2 kids. So I feel like that's in there.
And 2 kids. Yes, that's a very important component as well in the equation. Is it much beyond what you guys have dreamed when you started, or would you say that you had very bold ambitions when you started, and you were planning something like this?
It's funny because probably most CEOs are like this. I think they are, anyways, that we feel like we could have done better.
I like the mindset.
And so like we feel like, cool, like we've done this, but we feel like, hey, like we left a lot on the table through just dumb decisions that we made about, and not just inexperience, right? Like when we started, as I mentioned, like we had no experience doing deals. We had no experience, like none of us had ever managed a single person, like we'd never been on a board of a company, we had no experience. And so we learned a lot, but we definitely made, a ton of mistakes. And so I think we feel like, hey, like it could have been better. And so it's also like we are usually very focused on, all of the problems. Those sort of what land on our desk is when there are issues. So our lens tends to be mostly focused on, fixing things, which it should be. And then it also feels like we tend to look at just kind of being incremental with our approach to things. And so, I don't actually look at like the consolidated financials like all that often. And when I do, and when we do, we're like, oh, like, cool, like that's nice.
It's a nice size.
Yeah. But then we kind of go back to like, the reason that's nice is because everybody's doing the right thing on a day-to-day basis, and we're taking care of, operations in a long-term sustainable way, and then those things can kind of come together to create a result. And so it's honestly not something that we fixate on that much. We fixate a bit more on, okay, how do we make sure the next deal goes right, or how do we make sure the next hire is the right one? And we're much more sort of focused on, as I've kind of said, just trying to do like the little things right every day, with the belief that we're kind of big believers that like process matters more than outcomes. So if we just try to do the things right every day, then like that'll generate the results we want. And like, as we say internally, because we're big like sports people, like the scoreboard takes care of itself if you're doing the right things.
Right. So we were talking typically the model, and please educate me because I'm still learning a lot about this area, that we kind of have the traditional route. So we just raise capital to be able to go through a paid search of 24 months typically, and then we acquire or don't acquire if we are not able to find the business. Then we have kind of the self-funded, where the searcher funds his own search, and then we'll raise capital from investors. We also discussed kind of the SBA loan that we have in the US that is not available, for instance, in Europe. You decided to go in kind of a different way, kind of the dream of every searcher nowadays, which is to create a old call model. Could you explain a little bit more what was kind of the direction in that puzzle, especially for the ones in the audience that are still learning about entrepreneurship for acquisition?
Sure. So I think we definitely did the holdco model mostly because we hadn't been educated about all the like quote unquote right ways to do a search.
Sometimes it is better. You start kind of confused about, should I go left or right, or you just created your own model, right?
Yeah, it was just kind of what we came up with. And again, we kind of came up with it as more of, hey, if you owned a bunch of different companies that were uncorrelated and they had cash flows, like that would be a good thing to own. So we came at it much more from like an asset management perspective, in which case like you want more than one. And then we layered that onto small business, as opposed to starting from like the ETA search lens, which is very single company focused. So that's just, I think that's just it's a byproduct of where we started. And that just sounded interesting to us. And so we'd already kind of like, I don't know, like sort of committed to that idea in our head. And then when we started talking to people after the fact, at the time, pretty much nobody was a supporter of that as an idea. I think since there have been some people who have done similar things and kind of, proven out that this can happen. But, most people said, sort of, well, just start with a single search and just do that and don't focus on other companies. And it's too much. I remember one guy said, it's like having one kid is like very different from having like 8 kids, and, like portfolio companies are like kids, and, you don't necessarily know what you're getting yourself into, and all those sorts of things. And it's not that any of them, most of the negative feedback and pushback we got, the points they were making, I mean, they were all right in terms of the things that they talked about, like that is true. But we just figured that we could figure it out, like that it wasn't enough of a problem to warrant not doing it, even though all of the things they said, like they were still problems. They just didn't kill us.
Right. So, how do you see kind of and I don't want to jump into the future of Chenmark, but would you kind of see the evolution of this old co model kind of having 20, 30 companies in the next 20 to 30 years and keeping growing and growing and accumulating more cash flow to be able to fund, and of course at a certain size then maybe you'll be able to speed up, and you are already seeing it, right? Because you have multiple companies generating cash flow, so you can maybe speed up the process of acquiring new companies. Then in the beginning, maybe you needed to go slowly, right? Or slower.
Yeah. I mean, it's basic, it's just compounding.
Exactly. You explained it.
So, you know, I think now we started off and maybe if you could buy one company a year, like that was good. And, you know, now we're at a stage where, I mean, it kind of depends on the size of the company and the structure and all that sort of stuff. But, you know, this year we can probably buy 3. And if we do that, then, you know, the next year, the year after that, maybe you can buy 4 and you kind of build from there. But I actually think for us, at least, doing it this way has allowed us to spend more time thinking about the systems and processes that we need to have 3 more companies or 5 more companies or those sorts of things. And in the early days, and I think some people who have pursued a holding company structure, you know, have raised a lot of external capital up front, which is like, you know, good for them. Who doesn't want, you know, $30 million to deploy? And we certainly talked about that a lot, you know, in the earlier days. But I think that, especially for us, as I mentioned, no experience, having to actually sort of like be incremental in our building the business for us has been a really value added positive thing, because I look back now and said, if in year 2 we'd had a lot of money to deploy, I don't think we would have done it as well as we could now, because we didn't necessarily have the infrastructure and more importantly, the culture to govern and manage it properly. So yeah, but you know, I think we're going to just keep doing what we're doing, and we still see a lot of opportunity in the space. And so free cash flow goes towards either investing in the businesses we have or buying new ones.
And so when you kind of the mistakes are cheaper when the boat is smaller than you know, just starting to make mistakes with a lot of money. It becomes much more painful, right? So then you can learn a lot early on and start replicating or applying the lessons learned as you keep moving forward.
Absolutely.
So let's go to the first acquisition. So at the time, it was kind of a local acquisition, close to where you were living, or when was also the timing to kind of start moving abroad? I know that I'm asking multiple questions, but I'm super curious. Yeah, I think so it's true, right?
We found the deal through a broker, and we met the broker on a different deal, and it was landscaping and snow removal somewhere else entirely. But we learned a little bit about the business through that process. It didn't work out. And then a couple months later, that same broker reached out to us and said, hey, you know, I've got this other company that's a commercial landscape snow removal business in Maine, and it might be a good fit for you. And so we, you know, got some information and it seemed interesting. And it ended up leading to an acquisition. And so, yeah, I mean, I would say that landscaping in general is more complicated than it seems from the outside looking in. There's a lot of different moving pieces. And I think to run a good business in the space, you have to be pretty, I'd say, like, operationally well run. And so yeah, we that closed in September of 2015. And then I guess we were off to the races.
And just to have an idea, whatever you can disclose, so what was kind of the size of this was the first platform company, or it was a smaller one that then was incorporated in a platform company?
Yeah, it had, it's funny, you kind of, I think it was 1.3 of EBITDA when we bought it. And we didn't have to take out any bank debt because we had a very large seller note. So that kind of made the process a little easier for us. And it had probably sort of 15 to 20% EBITDA margins. And so that's a good, for an individual search, that's a good deal. For us, we had somebody, right? Yeah, we had 3 partners and we had somebody else running the business. So, we searched while we searched while we were still working, but I kind of still think about the first year or 2 of actually owning businesses as almost like our self-funded search, because there's just not that much extra cash to go around if you're, we in that situation, we had the founder stay on for a period of time. So they were still running the business. We still had all the financial obligations. We're trying to save money for the next acquisition, all those sorts of things. So I think a lot of people now are very interested in the holding company model. I think to at least do it the way that we did it, the early years are very lean from a cash as well as just bandwidth perspective. So it's not necessarily the most glamorous thing. I mean, it's not that glamorous now. It's not glamorous at all now, but it was decidedly less glamorous in the early days.
At least now you are able to pay you well, and at the time it was not possible, and it took some years, I imagine, to be able to get to that state. But at the same time, that's the pros and cons, right? So it's amazing to have another 2 partners and one person helping in operational side of the business, but at the same time,
a lot of people.
You need to do sacrifices in the beginning, like in any company that we start, right?
Yep, exactly.
Makes a lot of sense. And so you were saying in the way you were able to finance the deal or fund the deal. So did you raise any external capital or just a small chunk? It was all through seller note. Did you guys consider to use the SBA loan? It was not possible given the old co model that you wanted to build. Kind of again, educate us here.
Well, I'd say so a couple different things. First of all, when we started, I wouldn't even say that we were using the language holdco model. I think it was more just sort of, we're going to buy some company.
Let's buy the first company, right?
Yeah.
And then we'll figure out.
Yeah. So we always wanted to buy more companies, but it kind of started off, I guess we'll just start by buying one. And kind of see what happens. And so,
or let's buy 3 or 5 companies. We are free. Maybe I will manage one, you will manage other one, and we have at least 3 CEOs here in the partner, in the partnership.
And I think it was pretty loosely defined. And then the first deal we had essentially some of our own capital and friends and family, small group of friends and family. Honestly, we did talk to some professional investors, but nobody was particularly interested in funding us because we had this kind of weird idea of a model, and we're also this weird founding group of husband, wife, brother-in-law, and to mention, no experience, and so no track record, nothing. So
it makes sense. A family company, let's say at the time, buying other family companies. So it was a good pitch.
it did work. I mean, it was a great pitch with the owners of the businesses. With investors, sort of less so. And so, that's that's basically how we started. So it hasn't really changed much since then.
Right. So it was mainly so the family and with some friends and so on, kind of the 3 Fs that we talk in startups, right?
Yeah.
But so, and of course, at the point that you get to 10 platform companies, it is impossible to you guys to be in operations. So you need to be able to bring a pipeline of candidates to the business, a pipeline of CEOs to be able to acquire. I assume that you have kind of almost 10 CEOs, 1 per platform company or GMs, whatever you call them. What is the model nowadays as you add more and more acquisitions to Chenmark?
Yeah, so a little while ago, probably 3 or 4 years ago, so we had to part ways with one CEO. So Palmer actually stepped in to run that business. And then I was running search, so looking at new opportunities. And one came up that was close to home. We had nobody to run it. So I stepped in to run that business. That was in 2020. And around that time, we were sort of like, to your point, like, yeah, we've got people to run. The three of us can run some businesses, but like we can't grow. And so we were at a situation where we were turning away opportunities because we just didn't have anybody to run them. And it's not like you could just pick someone up off the street to run a small business. Like it's a very, I think, specific skill set, as well as more so than a skill set. It's a type of person, it's a personality, as well as a culture fit for us. And it's a unique person, I think, who wants that role. And so it sort of started a little bit ad hoc, but and I give my husband James credit for really masterminding this, but developing a program that we call the Generalist Vice President Program, or GVP program, where we bring people in who, they're often people who sort of know about search, maybe they went to business school, they heard about it there, or they kind of listen to a lot of podcasts, or they hear about it somewhere. They think it's interesting and compelling, but they're not necessarily interested in doing it themselves for whatever reason. They kind of, even if they probably be perfectly successful at it, they sort of opt out for whatever reason. And so they tend to, that's usually the type of person who is a good candidate for us. And so they come in, and we've sort of said that we're not going to do a new acquisition unless we have somebody from this program to run it. So we're not going to hire external people. And it's very, very important to us that the people who are running the businesses are people that we know and trust. Because once we run a business, I mean, it's pretty decentralized. So they're running the business and they're making all the decisions. And, someone comes and wants a raise, or, they need to, part ways with someone or go into a new market or whatever, like they are in charge of making those decisions. And so you have to have a foundation of trust, we think, to give people the to empower people to make those decisions. And so, people come in, they work in Maine for a period of time, and then they go work in one of our operating businesses to get some sort of hands-on operational experience. And then when a new acquisition comes up, it's at a certain stage in the process, we basically send an email out to people who are eligible and say, who's interested in running this company. And then we go from there. So that's basically the program. It's been really wonderful for us. I think it's allowed us to bring a lot of really talented people on board, a lot of like-minded people. And I think, without it, we wouldn't really be able to grow. So it's a big focus of ours is, when we have a good pipeline of people that we feel could run, the companies, then we feel more comfortable being a bit more aggressive about going after businesses to buy. Because for a while there, it was like, what's the point of searching? We don't have anybody to run the business. It's just a waste of time.
I can see that the pipeline of CEOs, the pipeline of leaders, as we always say when we are scaling up a company, is really the bottleneck of growth of the business. Right?
Yeah, so that was,
you need to be able to identify and have a brand, and you are doing that job as well, right? To be able to identify acquisition targets, but at the same time, then you need both. But it seems that you are pretty strong in terms of the opportunities that you are able to find. So then your bottleneck is much more who will lead the new business, right?
Yeah, so we're just trying to, that's basically it. And so I feel like since we kind of got that program up, and I have to give the people who started when it was just, an idea, who joined us then, a lot of kudos for sort of seeing the vision. And so far, I mean, it's a big focus of ours, and we've been really, I think, fortunate to be able to attract a really great group of people that we're very excited to work with.
And kind of as you guys evolve it from one to let's say from the first company to the 10 portfolio companies, it's easier to say in that way. Did you guys have the idea that you would be the first CEO, so each of you would be leading a company, or the four, because you were three partners plus one person in the beginning?
I think you're giving us more credit for thinking through that than we had. At first, honestly, we hadn't really thought about it that much, which, I mean, I think that when you buy a small business, you have to know that, hey, like, I might have this plan, but the backup plan is me running the business. And that certainly has been the case for almost all the acquisitions that we've done. And so we started with that, but we didn't necessarily start with that well thought out of a talent management strategy, which again is probably why it's good that somebody didn't give us like a boatload of cash in early days, because we would have probably burned through a lot more money learning how to think more strategically about our talent management process and sort of all that sort of stuff.
Kind of the three first acquisitions, or you were able to have one leading one company, or you had a different split of responsibilities? I know that I like the way you put it's kind of search is another company, or because you need to have someone full-time dedicated to identify new acquisition targets, and maybe at a certain time it is not enough to have. We are talking maybe about one partner with his team or her team leading the search division, let's say. Does it make sense the way I'm thinking about it?
Yeah, I mean, I would say actually we haven't done a great job with our search function over time. So, and part of that is because, one is, if we didn't feel like we had the people to run the companies, and two, if we just used a bunch of cash to buy one company, then you still have to wait a while before you have money to buy another company. So it's sort of a balancing act on sort of how full do you want the pipeline to be. Because if it's too full, you end up just having to walk away from things, like a lot of things. And so that's sort of always a balancing act for us. And I think for the three of us, it just kind of happened where, we were all kind of just doing whatever came in and kind of grabbing things as they kind of came our way. And then, when this CEO opportunity came up, we thought that it seemed like Palmer would be a really good fit for that. And he's done a wonderful job. And so it just honestly, that was the first time when we were like, oh, like, I guess we could, we can do this and like, we can do it well. And I think his experience kind of informed my own sort of interest in being like, oh, it would be fun to have that experience of being sort of in charge of operations. And I think that both of our experiences have been really good for the company overall, because it's, it allows us to sort of have that operator perspective, which I think is different than, purely investment focused. And I think it's made us overall a stronger group.
Right. I love it. Kind of, I can already see that the pipeline of acquisition targets and the pipeline of CEOs are two very important variables to track and to monitor and to get a lot of attention to. So I like it the way you worded it or expressed it. And let's go to the last, let's say, topic before we go to the last segment of the show, which is, what about the future, Trish? I think we introduced this one earlier in the conversation, but what would be your BAG or your big area audacious goal for Chenmark?
I mean, I kind of split the answer into two things. Is one, as I said, like, we're pretty incrementalist in our focus. So like, we're just going to keep doing what we're doing, but at larger and larger volume. So I I think that for me, you know, a big goal, there's not necessarily a number of companies or a revenue size or anything, but it's kind of allowing that compounding math to work out while also maintaining, I think, the culture that we have now, which I think it is pretty cool in terms of the level of, you know, ownership and that people have for the outcomes. So basically, I know that's super squishy, but it's basically keep doing what we're doing. Don't try to get too cute. Keep buying companies with internally generated cash flows and keep trying to operate, you know, find great people to come work for us, and the rest will kind of take care of itself.
Yeah. As a scale-up lover, I love it because that's one of my ingredients to scale-up success, which is radical focus, right? Back to the basics. Don't reinvent the wheel. Don't create more complexity. Just do well what you already do. And my second ingredient, it's all about the team, having the right people on the right seats. That's your pipeline, your CEO academy, your pipeline of talents. And the third one is the execution machine, what you were talking about, the ops, ensuring that you have a framework that you can share across the companies, et cetera, et cetera. So it's cool to see that it also applies to holding company.
Absolutely. Yeah. It's interesting because I don't think the playbook is like, you know, there's a lot of information out there. It's not secret. I think it's just about having the mindset or the help or whatever to actually do it, you know?
Exactly. Yeah, I think that's really the point, and especially sometimes I feel, and I love what you said in the beginning, is you start educating yourself too much about it, that you kind of lose the courage instead of just starting and doing the first step and the second step and the third step, and you fail and you stand up and you go again. But when you start kind of overthinking and what if, then you are blocked and you don't move forward, and the years keep going. So
Absolutely.
So to keep counting, let's say, in other words. So let's go to the last segment of the show, to be respectful of your time, Trish. And if you would have the opportunity to have a coffee with yourself at the beginning of this adventure, what advice would you offer to your younger self?
I would have said that, like early on, and you've heard this from so many people, but if you feel like something's not going right with a person, or like the first time you think that maybe you should like fire somebody, like that should probably be when you do it. I think that especially in our early days, we knew some people just weren't the right fit for the team, and we just tried to work around it or make excuses for it and a lot of that stuff. And so I think that the advice would be sort of to trust your gut with personnel issues, and sort of to not avoid making the hard decisions that like you're eventually know you're going to have to make anyways.
What are you the most proud of on your journey so far?
I think it's really cool when I get to work with people and be able to provide opportunity for them that they wouldn't necessarily have had otherwise. You know, for a lot of people in our operating businesses, they didn't necessarily have the most, you know, they had good jobs, but they didn't necessarily have the level of sort of career trajectory or compensation levels that, like, I would argue they probably should have based on their skill sets, because maybe the previous owners didn't necessarily see it the same way that we have. And so for me, the coolest thing is when you're able to sort of identify some talent that's in a business and give them the opportunity to step up and sort of see the sort of cool results that can come from that. I think that's the coolest thing by far.
Quite amazing. Yeah. Worst advice ever received?
I was thinking about this. I mean, I tend to ignore most advice, for good, for worse.
This is not mindset.
This is not I was looking at this question. This is not business advice, but I remember it was sort of halfway through, and I fell. I really hurt my back. Like, I don't know if you ever hurt your back, but like one of those, like, it's hard to get out of bed in the morning and like everything hurts. And it lasted for a while. I was like pretty uncomfortable. And I went to this physical therapist who was doing whatever. And he just was telling me, he's like, well, like, you're getting really old, so you're just going to have to like dial back like the intensity of your exercise, and you're just not going to be able to do these things anymore, and all this sort of stuff. And that was awful advice. I like never went to him again. I found another person who had a much better mindset, and he basically was just like, yeah, you hurt your back, but honestly, you're really stressed out. He just gave me these like breathing exercises to do, and within like a couple of weeks, my back was fine. Wow. I think that like that was a very good reminder to me that like a lot of people like that your attitude can really shape your reality. And like if I'd listened to that one like quote unquote expert, about like what I can and can't do, like I would have limited myself. So you have to surround yourself with the right team, and the right people who believe, and be open-minded to different things. Because I remember the first time he had me do these breathing exercises, I was like, what are we doing? This is super weird. But then after I was like, oh, I feel really good. So I think that there are elements of that you can bring back to culture and personnel management. Just again, making sure you got the right people on the team that have a positive attitude and can acknowledge there's a problem, but also have an attitude that we can fix it. And I think that just goes a really long ways, especially in our world.
It's very consistent, kind of back to basics. That's what I hear you screaming.
Yes. Yeah. We don't have to do anything particularly exciting.
Yeah. You don't need to do a super complex form or again, reinvent the wheel.
Exactly.
Just do what you need to do and you will see that it will improve. Love it. And now the resources, your favorite book, and this can be business or non-business as you wish.
So I love reading. So this is a hard one. The one I don't know if this is my favorite book, but it's the one that I think about the most often. I read this years and years ago. My boss gave it to me. It was called The Psychology of Intelligence Analysis, it's super dry, but apparently, at least back in the day, it was sort of reading for like CIA, like intelligence, analysts. And there's just a lot of really interesting stuff in there about how to read people, how to interpret different things that people say. And I just remember reading it. It had a really big impact on me, and sort of how I can still see things that people do that like are examples like directly out of the book. So that one I read when I was probably 21 years old, and I still think about it.
What a great addition to the list. I'm curious now.
All right, there you go. It's quite dry. It's not a beach read, but it's got good stuff in it.
Got it.
Yes.
And your favorite movie or series, Trish?
This is The Family Man with Nicolas Cage. It's a Christmas movie.
I love it.
Or a holiday movie.
If I'm thinking about the one, sometimes I confuse the names, but
we watch it every Christmas. I think it's a great reminder of values and keeping a perspective on what's important.
Love it. And finally, your favorite podcast, excluding this one, to not put you in trouble.
Yeah. Hard. I mean, there are so many wonderful ones out there. At the moment, I'm very into Hidden Brain, which I guess it's also a psychology podcast. I wouldn't call myself super into psychology, but it takes a lot of concepts about how we think about things, and ties them to real life examples. And they do it in a very good, like well-produced way. And so I enjoy, and I really learn something from every one of their podcasts. So that's the current one in my feed.
Well, then it seems that you kind of listened to the 300 episodes because you were able to add a new addition to every single one of them. So,
I try, you know what I try to do though, is I try not to.
or did you use AI to kind of go
No,
through?
I did it. I did it. I always feel like I try not to listen to the podcasts and read the books that everybody else is reading. So like sometimes I
Nice.
do, but I also feel like if everyone on my team here is listening to that podcast, like me listening to it, the same one, like isn't really adding anything. So I
Need to
try
shake
to
things.
listen to different things so that I can
Right.
have a different perspective. So I'm always, I feel like reading and listening to very random things, but I think that it helps me think more broadly.
Trish, it was a lot of fun. Thanks so much for making the time. Congratulations for what you guys have been building and for being so generous with the community always. And all the best for the future. And you are always invited to keep sharing updates and also covering different topics on the show. So this is your
Sounds
room.
good.
Feel free to come back.
Hopefully it won't take us 8 to 9 more years to get to 20 companies. So there you go. But thank you. It's been a pleasure, and thanks for having me on.
Likewise. And to our community, thanks for being there. We keep bringing you the best of the best to make your life a little bit easier as you scale up your company. See you soon and keep scaling.